rating of Mr. Dong indicates that the money can be borrowed at 10%, and the present value of the 10% for an ordinary annuity is for 5 periods is 3.7908. So class, I'm not sure if you already know how to calculate the PV factor by using your calculator, because syempre hindi natin madadala lagi yung PV table. But in this problem, it is already given 3.7908. Now, so next paragraph is all about the about the continuing franchise fee. So the agreement further provides that the franchise must pay a continuing franchise fee equal to 5% of its monthly gross sales. Then next is Ms. Alice incurred direct cost of 540,000, of which 170,000 is related to continuing services, and therefore the balance of 370,000 refers to the initial franchise services, and indirect cost of 72,000, of which 18,000 is related to continuing services. So lastly, Mr. Dong started the operation of his McKinney Rogers restaurant in Pangasinan on September 2 and was able to generate a sales of 950,000 in 2024. So the first installment payment was made in due date, and the due date again is December 31, 2024. So class, in any problem, especially in the CPA board exam, my advice is to look, actually we should begin with the end in mind. So you should look at what is the finally, what is the required of this problem. The requirement is to prepare the journal entries in the books of Ms. Alice, who is the franchisor, and compute for her net income under the following scenarios. We have scenario 1, reasonably assured collectability. Scenario 2 is collectability is not reasonably assured. Scenario number 3 is uncertain. Okay. So with this, so let me show now the journal entries. So first is let us do the entries for the scenario 1, reasonably assured. So based on the problem, on May 31, we should record, this journal entry is to record the receipt of the cash payment of 400,000 and the non-interest bearing note upon signing of the franchise agreement. So cash debit, that's 400,000. Then for the note receivable, this is 606. So we should not record at face value because again, this is a non-interest bearing note. So to get this, the formula is the balance of, so 1.2 million minus 400,000, that's 800,000 pesos, divided by 5, so that's 200,000 pesos per installment, multiplied by the present value factor for an ordinary annuity at 10% for 5 periods, so that's 3.7908. So the result is 606,528. And with that, the total amount to be credited to the deferred revenue of initial franchise fee is 1,006,528. So next entry to record actual transaction is on December 31. This is to record the direct cost of the initial and the continuing franchise fee